a lack of trust. In today's business climate, few can weather the storm that is the global credit crisis. No one and nothing is immune, but Islamic finance, also known as Sharia-compliant products, have been shielded to a certain extent.
The first 6 months of the year, Sharia indices, which typically exclude financial stocks, were doing better than regular conventional indices. In the third quarter, the maximum impact has been felt by companies which are in the materials or energy sector, and they have been hit really hard, up to 40% down. But over the 9 months period, they are a little bit better off than conventional indices.
Islamic finance deals, by their very nature, require the lender to get to know the client. That helps to appease concerns about investor confidence, which have been at the heart of the current crisis. Ken Eglinton has been an Islamic banking specialist with Ernst & Young for the past decade. He says that's partly due to the structure of these deals.
You can't use money as a commodity.
The ban on charging interest is a well-known principle of Islamic finance. You can't make money from money. Any cash that the lender gives out must be invested into an asset or an income-generating business.
You can't solely be a financier. You have to in some way have bought into his business proposition and be dependent on the success of that business proposition.
If you want to borrow capital, the lender becomes a partner in the asset or business. That means the lender has an interest in it to succeed and shares not only the profits, but the losses as well. In the case of assets, the asset can be held as collateral. There is no speculation. Business contracts must be clear, in which all parties have full knowledge of what's expected. Islamic bonds, known as sukuks, are an alternative form of debt financing. Unlike regular government bonds, sukuks are backed by assets. Bondholders get a share of the profits earned by that asset. High-profile deals, such as the Dubai Port's P&O merger, were funded by sukuk issues. Now, sukuks are showing broader appeal.
The UK government considered issuing a sovereign sukuk. Those plans are now on hold, but Gordon Brown's made it clear he wants London to be an Islamic finance gateway. There's an enormous market out there seeking Sharia-compliant services, and London doesn't want to miss out.
Ratings agency Moody's says the global Islamic finance sector is worth $700 billion and has the potential to grow to $4 trillion. But all that could change as the credit crunch hits the banking hubs in the Middle East.
A loss of credit for the rest of the economy globally is going to lead to businesses failing, it's going to lead to unemployment, it's going to lead to people unable to meet their financial commitments, and I think that's going to affect Islamic financial institutions.
As the world braves the turmoil of the financial crisis, some argue that Islamic finance is nothing more than back-to-basics banking. But in the current conditions, the banking industry as a whole is being forced to reconsider the basics. Leonie Lakhani, CNN, London.